Hello, everyone, and welcome to today's educational webinar hosted by International Trade Council. My name is Ron Nolasco, and I'm delighted to be your moderator for today's session. Before we start our discussion, let's take care of quick housekeeping matters. Firstly, can everyone hear me clearly? If you can, please type in yes in the chat box. If you can hear the audio of the presentation, can anyone hear me? Perfect. Thank you so much, Lisa. Thank you. Thank you for confirming. Now let's ensure that everyone can see the presentation slides. If you're experiencing any issues with the audio or visual, please let us know in the chat box and I will assist you promptly. Great. Seems that everything is running smoothly. Let's just have a quick reminder to our attendees. If you have any questions during the presentation, please feel free to type them in the Q&A box located in your webinar interface. We will address as many questions as possible during the Q&A session following the presentation. So without any further ado, let's get started with today's educational webinar. Our topic is Shell Companies, Nominee Directors, Offshore Setups, the Real Cost and Risk. During this session, you will gain valuable insights into how banks and payment providers assess and manage the compliance risks associated with offshore structures and shell companies, and why these are often deemed high risk. We'll explore the fine line between tax optimization and tax avoidance, shedding light on the unintended risks that offshore arrangement can pose. Additionally, you'll learn about the specific challenges tied to nominee directors, shareholders, and fiduciary companies, as well as broader financial risk, including increased banking fees and regulatory scrutiny that comes with offshore entities. Please join me in welcoming our speaker for today, Victoria Soltes, CEO of PSP Angels. Go ahead, Victoria.
Hello there, and thank you so much, Ron. Welcome everyone for today's session, and it's an absolute honor to be here to talk about this topic because during my experience and practice as a payment and banking consultant, we are always facing recurring questions. And one of the most common questions is that if I set up an offshore company, why is it a problem to find a bank account or a payment provider? How can I join in the international money flows, and how can I move money internationally? And that's always a problem. And that's what I thought, that let's put this once and for all in an easy to understandable format where people can refer to this later, just to understand how banks think and how internationally the money moves, and why shell companies, nominee directors, and offshore setups could be a potential risk for banking and payment perspective. So that's what we're going to talk about today. I just want to say a couple of words about myself, that who am I and how do I come to this subject? Well, as we said, that I'm the founder of PSP Angels, which is an independent payment and banking consultancy. We argue that payments and banking should not be considered as just a side part of finance or accounting, but it should be put in front of the strategical planning for the whole operation, because payments and banking affects every aspect of the operation. It impacts the cash flow, the compliance, the technology, the product, the customer experience, how people are paying you, the risk, who is holding your funds, how is it being handled. So that's why we feel very, very strongly about bringing out the message that payment and banking should be considered as an important aspect, and you should plan your operation around how the money can actually flow through your business. I also wrote a book about the subject, which is Moving Money, How Banks Think, which is available in Amazon today. And I'm speaking about this in different international conferences. I'm also a former lecturer of the University of West London, and the industry also awards us. So I'm very proud to say that I was awarded as a Businesswoman of the Year 2023. And I was also a Payment Consultant of the Year this year. So this book has all the main aspects that we are going to talk about, but obviously we have limited time today. So if someone is interested in the subject a bit more, I would encourage the person just to go to Amazon and find out more about the book, which is available on all Amazon stores, as we said, because this book is puts in perspective the overall knowledge about the payment and the banking industry as a whole. It goes through the history of banking, why we have compliance as it is today, meaning why the banks are giving us all these headaches, what are the risks, banking languages, global payment methods, what's the difference between cards and open banking, for example. It mentions a bit about the accounting and company setups, which we're going to discuss a bit more today about the offshore company setups. It also affects technology and data security. As we said, payment and banking is affecting every area of the business. So technology and data security is not an exemption of that. And we developed a payment framework which helps every business to put things in a much better perspective. It's a very easy to follow 8-step framework which can be applied to any business to organize the payment and the bankings in a much more efficient way, avoiding risks, obviously optimizing the costs, and just to really understand what are those questions that we need to ask in order to fix all our flows. We also believe that currently accountants are appointed to deal with these issues. So most probably whoever is setting up an offshore entity for you or discussing taxes and tax planning are basically accountants. And we argue that accountants are just not trained to deal with certain aspects of payments and banking. I mean, I'm an accountant. I was never trained on Visa, MasterCard, chargebacks, open banking, bank compliance, not even technology integration, risk. So there are a lot of information which is only available online. And until today, there was no overall institute or associate which was bringing up these problems and educating people about that. So that's what we decided to do. So that's when we set up the Scholtes Institute, which is offering courses, workshop, webinars. Online, we have a lot of free content. We deal with the private trainings as well, which is giving a clear understanding of the banking and the payment world in an independent and completely unbiased way, so everybody could understand how this world is working and make the most relevant decisions for themselves. It includes different practical cases, real life examples, and of course, more importantly, is also giving a certification. So what we believe that if anyone would like to hire a payment executive or a banking specialist in the company, they could, because now there is a certification for that. And of course, the Institute also offers the community membership. So let's go through what we will discuss today. First of all, we need to understand how to think like a bank, and we need to understand the different compliance hurdles. We need to really get our head around why banks are restricting certain transactions and why some just let them go. What is this difference between banking decisions? And more importantly, how does it affect us? And of course, share companies and nominee directors, why are they considered higher risk than normal? We're going to go through what's the difference between tax optimization, which is legal, frowned upon, but legal, or tax avoidance, which could lead you to jail, because there is a massive difference between unethical, but you're not going to go to jail for that, or straight jail time. And what is the issue with the so-called offshore? Why you cannot just incorporate the company wherever you want and pay less taxes? I tell you up front, because if it was that easy, everybody would do it, and certain countries would have never have any kind of tax income. So obviously there has to be some kind of limit on this, but we're going to get into this deeper. Then it leads us to understand what is high risk from a banking perspective and how does it affect your company if you are deemed medium or even high risk from payment service providers or banks or any kind of financial product services providers. Then we will go around the risk around the nominee directors and even nominee shareholders, which are very, very controversial to say the least. They're still being used, but there is a significant risk exposure if you're using nominee directors or even nominee shareholders. And what is the risk around the banks and the fiduciary companies who advertise them, right? Because we have seen so many places, Instagram, Facebook, go and avoid taxes. I will help you how. Set up an offshore company and live tax free. I will give you an advice how. There is a serious risk around these companies, and this could really affect you if you're using any of these companies as well. And all over, what does it mean for us as a society? How does it affect us globally? What is the global risk around these approaches? What can we do about that? So it's going to be an interesting topic. So let's start with how banks think. So you need to understand how banks work to really understand why they think in a certain way. And when I'm talking about banks, I'm talking about all the financial institutions or payment service providers, anyone with a financial license who is holding money or executing transactions on behalf of third parties. So basically, the government is making decisions through fiduciary and monetary politics and policies, and they are advocating into doing something. For example, increasing the interest rate or decreasing the interest rate, or giving out, these subsidy checks that we have seen through the COVID. So the government and the central bank is trying to control the environment, the economy in different financial decisions. But who is going to execute those decisions? I mean, obviously, you can't put a policeman next to everyone, monitor that, oh, you're paying in cash. Did you do your submissions? Did you pay your taxes on that? So, where can you find out who is doing the right thing and who is trying to avoid the system? Well, those are the banks. You catch them where the money is, right? Follow the money, you will realize the real intent. So the banks are put in this very weird position of being semi-governmental because they are the backbone of the economy, making sure that everybody is doing the right thing. So the banks are the ones today who are appointed to force legal payment movements and tax payments. And banks today have two main goals in their work. One is that everybody is paying their fair bit of taxes, so there is not even an opportunity for tax avoidance, and no crime is committed. Because if everybody is paying their taxes in an economy and everything is legal, then the economy is set right, and most probably that economy is going to grow through the different policies that the government and different decision makers are making a decision about. But the banks are the ones who are appointed to enforce those ones, and that's the reason that they have a license, because the regulator says that I trust you enough that you will report if something is wrong, you will stop if something is not right. And that's why I'm trusting you with this license, that you can hold funds on behalf of third parties, you can execute transactions, and you will report everything back to the tax office as you should by the regulation. And that's why we are talking about financial licenses. And as a rule of thumb, every time when any company is either holding funds on behalf of third parties or executing transactions, give me the money, I give it to him later, those are usually subject to financial licenses for this reason. So no one forgets to declare taxes. It's like, oh, I have money, but it's not with me. No one knows where my money is. So I just forget to put it on the tax return. Banks need to report everything. And that's why it's a massive burden on them, because banks are getting a penalty for non-compliance. Basically, they don't do what they should do, or they are not doing the necessary amount of checks. For example, they accept money from unknown sources, or in any way intentionally or unintentionally assisting with any kind of money laundering or tax avoidance, they get a penalty for that. Or they can even lose their license, which is a very serious incident because, trust me, banking licenses or even any kind of financial licenses are not cheap. Um, but they are still private entities, right? They still need to satisfy the shareholders and still need to generate profit. So what they do is that they chase the so-called perfect client, the client when there is not even an opportunity or any kind of risk of tax avoidance or illegal transactions. And in this way, that's how banks want to avoid risk. And that's why when we are talking about different financial institutions or banks, we see that every bank and financial institution's biggest dream is the large volume, no risk client. For example, a supermarket. I mean, what is the money laundering opportunity going through a supermarket? But when it comes to online businesses, international businesses, contradicting regulations, it's allowed to do it in one country, but not really legal in another. How do I consider that? That is the risk for the banks, that even a little slippage can cause them serious penalties or even losing their license. So banks set up a so-called compliance department, which is checking every single transaction, or if there is a lot of transaction, the majority of them, to filter out that where are the wrongdoings, and not just the wrongdoing, but where could be the opportunity for the wrongdoings. And based on this likelihood occurrence of doing something wrong, they set up different risk categories based on low, medium, or high risk when it comes to evaluating the different clients. So banks basically need to balance their portfolio. But as we know, the higher the risk, the higher the profit, right? Because if I'm a very high risk operation, I can't bank with anyone, no one accepts me. So finally, if someone is accepting me, I'm willing to pay the premium for that financial services. And banks and financial providers know that. So the higher the risk, the higher the profit for them. But their aim is to balance out the portfolio, that even if everything goes wrong, we are still good guys. We still be able to run our business. We're not going to go down, and we still need to generate some profit. So that's the reason that every bank and financial institution has a compliance department to say that what is their risk level. And that means that if they have a lot of low risk clients, they might have a higher risk appetite for higher risk clients for the extra profit. And that's why they might make a decision on Monday. It's no, and maybe Tuesday it's a yes, because this portfolio internally is always changing for the bank or the financial institution, and their risk appetite is always changing. And this is what we see many times when you get a letter from the bank that as of today we are changing our prices. Why? Because most probably the balance changed or in the portfolio, or they have new correspondent accounts, that other banks that they are working with. So it's a never-ending change. What you need to understand, because that is the basis what determines the bank's decisions over your fund and transactions. So let's talk a little bit about tax optimization versus tax avoidance, because there is a serious difference. And this difference can save you from jail time and serious penalties. So tax optimization is the one which is legal. This is when you're going to different accounting firms, law offices, and they tell you that, okay, we can optimize your taxes on an international level. You need to open a company here and move the funds around. And this is legal because you are in a new jurisdictions where you're acting legally, you have a substance, you are doing business as you should, but just the tax happens to be lower, right? Lucky me. I'm going to a new country when the tax is lower. Well, but I'm here, I'm doing the business, I'm doing everything legally, but just lucky me, the weather is better and the taxes are lower. So the most important thing here is that the activities, the management, the operations, everything is real. It's really happening. You are there. There are actual products or services that you're offering, and you comply with all the relevant local laws. that just the tax happens to be lower. And in this way, you can optimize those taxes in an international group level. It is still frowned upon by various bodies and providers due to reputational damage. So there could be still an opportunity for bank or financial institution who says that I don't want to be in the forefront of the magazine supporting these kind of activities, even though it's legal, it's reputationally not good. For example, gambling or adult entertainment, even though it's not illegal, it is frowned upon, and many times banks and financial institutions or any other businesses just don't want to be seen dealing with these kind of activities. Um, and also because banks think that there could turn into something illegal. I mean, you are already balancing on the very thin borderline. Maybe there could be some potential issues about this setup in the future. That's why, even though that you could be legal, the banks might still say, no, 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 I'm not risking anything for you, new client. On the other hand, tax avoidance is the one which is illegal. You are setting up shell companies. Shell companies basically is just a shell, it's just a show. There is no actual real management or activities taking place because the real management and activities are done elsewhere. You are just setting up a company in this jurisdiction for the pure purpose of cheating tax, paying less taxes. And usually the transactions or activities are faked. Oh, we are selling it from here. No, you don't. Or overstated. Oh, we are selling a lot from here. No, you're only selling, minimal amount of units. So this is a fraud. And it's very serious because it can lead you to fines, criminal charges, and even end you in jail. As we said, it can be serious prison sentences for these kind of setups. And as we said, that there is a very thin line because how someone can actually go to that jurisdiction and check it out that you're really there, you're really making decisions from there, the activities are there. So there are certain rules in compliance where they check how they could trace you between legality and non-legality. For example, do you have an office? Okay, maybe just an address. You have a utility bill for that office. Okay, can you please, it happened to me, even send photos of the production line because we don't really believe that you're really there. I mean, not oftentimes the bank is sending out an employee just to check the purpose, the premises, but this could happen. And as we said, if there is a shell company, if it's just a show that I am there but you're not really there, that is basically illegal, versus you are actually moving your whole operation to a new jurisdiction and this just happened to pay less tax. So what is offshore? Well, this is the time when we need to discuss what are the shell companies and who are these nominees. Back in the day, after the First and the Second World War, there were a lot of US citizens who realized that if they are taking their money offshore in a nice Caribbean island where the taxation is lower, they can save significant amount of taxes. And as the international trade started to catch up and we had internet and everybody could trade from the comfort of their home, it was really hard to trace where the real activities are taking place, right? Because, for example, if you're a baker, you know exactly that this is my shop, this is where I bake the breads, this is where I sell the breads, this is where I pay taxes, everything is clear. But if you're an online business selling services or even sending products online, where do you actually execute those services? And as we said, it's very hard to trace it down. Like, you are physically sitting in Germany, breathing the German air and eating the German food and running a business from Germany. So why don't you pay German taxes? How comes that you are in Panama or the Bahamas running the business on paper from there just in order to pay less taxes? This is clear tax avoidance, which is illegal. So the regulatory arbitrage is basically when you're arbitraging between different rules, regulations, and taxations between different countries to select which one is the best for you. And based on that, you start to do business from that jurisdiction, which is giving you the best taxation or regulatory environment for your business, i.e., paying less taxes or getting a cheaper license. So that's why banks started to come up, as you said, with this so called substance. Where are you really? How can I check it? Do you have a utility bill? Do you have a home? Do you rent a place? Do you have a factory? Do you have pictures of the factory? Where are your employees are on payroll? Yeah, we are working from home. No, sometimes, and it's getting harder and harder, as we said, now everybody is online and everybody's working from home, but banks still want to tie you down to a place where they can put their finger on you and saying that, okay, this is where you're acting from, that's why you're paying local taxes, not because you're just setting up something running from the internet and you're doing tax avoidance. So they set up also this so-called local director rule, which means that if the director is the one who is obviously managing the company and making decisions for the company. So if the director is living in a country, then we assume that they are making decisions from that operation. So if the management is placed in a jurisdiction, that's where the company should pay their taxes. That's their substance. So oftentimes we see if the director is living in Germany, but they have a company set up in Cyprus, the banks see that something is not okay here, reject. Or for example, the director is from India, living in India, the passport is not that important, but where the director is actually living, where is his tax resident, and they've got a company set up in the UK. That could be a very good reason for rejection, because no, why are you paying UK taxes when you're actually managing the whole company from India? Because you live in India. So that's when people started to realize that, yes, taking businesses offshore, taking advantage of these better taxation regime is what we are calling offshore today. There is not that much of a clear understanding that what is offshore and what is not offshore. Usually everything is offshore, which is better for your company on paper. So that's why usually banks have a very loose way of accepting or rejecting companies based on their status. What is offshore, what is not offshore? Obviously that could be a lot of argument about that, but the most important thing is that when you're setting up a company abroad, there could be a possibility for also anonymity. And we have seen this many times when a rich investor, for example, who's got political power, is investing in a company that they shouldn't. For example, a Green Party is investing in a chemical factory which has dubious operations of releasing chemicals in the local lake, for example. There might not be illegal activities, but if it turns out, obviously, that politician is gone and done. Or, for example, investing in weapon trade, right? The weapon company. Again, it might not be illegal, but the reputational damage for certain people could be huge. So oftentimes, these investors, these directors who are running these companies prefer also anonymity. And that's why we had this phenomena called nominee directors. When I'm appointing a local person, act on behalf of me. I'm the real director, but we just say on paper that you are the real director because you live in UK, I live in India, and so you can actually manage the UK company, and therefore now we've got substance. Or you have no political connections, but I have, so it's better off if we put you on paper. Now the problem with this is that today, whoever's name is on the paper is the real director and is going to jail for any kind of wrongdoing or taking any penalties. So the nominee director, even though it's still used, if it's super obvious, so for example, there's one nominee director for multiple companies, the bank is going to find out that it's a nominee director and that's suspicious from the get-go. And even if you're talking about nominee directors in terms of chairing multiple companies, that could be also a significant risk. Because think about it. There's one nominee director for 10 companies, and one company from this lot is doing something wrong. The bank is reporting them for fraud. The whole company is going down with the key personnel with it. which is in case this is the director, that means that all other 9 companies are now connected to a fraudulent director, which could significantly affect their capability for payments and banking. And this could be a significant risk when you are appointing a nominee director. Also, directors, as we said, it doesn't mean that if it's a nominee director just on paper or a real director, they have the full responsibility and rights. So that director can easily, usually it's not happening, but there is a risk that this director is going to the bank emptying your account. They can, because they are actually the director. So just be very careful, because nominee directorship can come with serious consequences as well. But what's even worse is the nominee shareholder, because banks realize that, okay, we are checking the directors, but we also need to check that who is the investor in that company, where the original money is coming from. And this is even worse, because if I'm appointing someone to act as an investor, prove that their money is the one which is fueling the business, they're also going to be the ones who are getting the profit. And they are taxable on that profit, which I, the real shareholder, is going to enjoy. But that means that I will never be able to spend that money. I will never be able to go to France and buy a vineyard for that amount of money, because everyone who is selling me a property, a car, or anything in a large volume should ask where this money came from. And if I can't prove it, that yes, it came from a business. What business? You have nothing to do with this business. That is a problem. So nominee shareholders in some countries, even illegal, masking who is the real shareholder within an operation, simply because that could be a serious opportunity to commit tax fraud or in any way doing some serious money laundering. So that is also a very, very important thing, that yes, there are some companies who are offering nominee shareholdership, but you always need to consider the consequences: taxation, source of funds, reputation, and where else are they, nominee directors and shareholders? How does this other portfolio affect my business? And often you just don't know what other businesses are dealing with. So there could be a completely unnecessary risk that you're taking. So let's see the risk from the banks and financial institutions perspective. So banks now know, as we know, that they want to avoid tax cheaters. They want to make sure that everybody is paying their taxes right, and there is no crime being committed. So having said that, banks are putting clients in different risk categories. The high risk category, which is the highest opportunity for tax avoidance or illegal activities, are related to the high risk categories, obviously, comes with higher fees, less favorable terms, limited access to certain products and financial services. Maybe your funds are not that secure, because if that payment provider is working with you, they're going to work with multiple of yous who are also posing significant risk on that financial operation. And imagine that they are getting an audit, a frozen funds, bank account is frozen for the financial institution as a whole because someone did something wrong. Your money is in it. So this is also a significant risk on you without you even knowing it. Also, what are they regulated under? What kind of rules and regulations are applying on them? How are they handling your money? You need to also do your due diligence on your payment providers. And if you are high risk, chances are your payment providers and banks are also going to be high risk, which is causing you a significantly higher opportunity for headaches. So the penalty for that, the frozen and the blocked funds, obviously, as we said, if that financial institution goes down, your money could be with it going down. And even the opportunity for lost funds is significant, because the higher risk you are, the higher risk the bank you're banking with, the higher the chances that bank is going to go down, and maybe your funds are going to be lost forever for mismanagement of the funds. What are the risks for the business perspective? Well, the business need to consider that not every country has the same rules on tax avoidance. So maybe in certain countries, your legal advisor or accountant could encourage you that this is the right thing, or even you can even open bank accounts or payment service providers in that jurisdiction easily. But there are different rules, and this could affect you as a business in a completely different way. Well, for example, we mentioned, the gambling, gaming industry, or adult entertainment, which could be frowned upon in certain jurisdictions, but could be completely illegal in other. So when you're an international company and you're banking with international banks, they have the responsibility to filter out on an international level that every single step of the way what you are doing is legal, and the source of funds could not come from restricted activities of the jurisdiction of the bank. So you might run a successful casino, for example, in the US under a US license, but if you have a software company which is supporting those software needs from Dubai, which is strictly under a different regime, maybe the source of funds which are coming from casino activities could mean that you have restricted access to the local banking ecosystem in Dubai because of these restricted activities. And these different compliance requirements are also showing the risk for businesses when it comes to banking, right? So if I'm telling you that open a bank account and put $1 million on it in, for example, Singapore, it's going to be a whole different risk and a whole different approach. If I tell you to do the same in Switzerland, tell you to do the same in China, tell you to do the same in Texas. So you feel that the same $1 million is not really under the same handling and the same safekeeping of the funds. So maybe you have a bit of more fear certain towards certain jurisdictions than others. But there are definitely different risk points here. And you as a business owner, you really need to consider this, that who is handling your funds? How is that funds being handled? Under what regulation they are operating under. Can they, for example, invest your money and then, oops, sorry, we invested your money and we can't give it back to you? What is the likelihood of frozen or blocked funds, which can obviously jeopardize your business? You need to ask those questions. And not to mention the reputational damage, right? So there's one thing which is illegal, and of course we shouldn't do that, and illegal is illegal in every circumstances. But what are the consequences when it comes to social media, when it comes to reputation, when it comes to customer trust? Maybe there are certain customers who will leave you because you're openly transacting with another third-party provider who just went down for environmental damages or, for example, political beliefs. Those are also very, very important parts that you as an international company need to consider. And working with and being blacklisted by banks and payment providers can have a significant effect on you, because one fraudulent transaction on a card, the provider puts you on a match list, you're not coming off from there for 5 years. So you have to go back to the provider who put you on a match list and beg them and prove that you fixed everything. And it's based on their goodwill that they will remove you from the match list. Otherwise, you're restricted to do any kind of online banking or payment processing for the upcoming 5 years. So that could be also seriously affect your business. And of course, not to mention the different penalties, prison sentences, which is coming with tax avoidance. And many times, a lot of clients tell me that, oh, I've got a different account. So I've got my main business account in certain jurisdiction, that I've got another one offshore in a whatever bank in a small island. The tax office is not going to know that. No, the tax office will exactly know that. If there is any investigation, tax authorities have the full capability to find all the funds about you. And more and more banks and tax authorities are sharing information across the borders. And those offshore jurisdiction tax havens are not as they were back in the 80s. Now we are heading towards a transparent, easy to trace all over financial system, and that's the most important thing that banks need to safeguard and keep, and that's why they are sharing more information about you than you would think. What is the risk of using these fiduciary companies who are advertising for tax avoidance and tax evasion and helping you to do illegal activities or openly encouraging you to do the illegal activity? Go offshore and start a company. First of all, the regulator is aggressively hunting down these kind of operations. And now with AI, it's going to be a breeze to just go through all of those social media posts and find out that who is advertising for what and give them the penalty. So they are giving the penalty for the fiduciary company who might even close the business. So you are there without having the nominee directors to sign, or there is no administrator who is paying your taxes locally. Obviously, it affects your operation because by the time you find someone else, the shift to the new administrator could be very timely and very costly. You lose your nominees, you lose your administrators. But what's even worse, that the regulator might even do an audit on the clientele. What we have seen, for example, in the Panama Papers, and remember that when there was the leak, and then everybody's name just went online. So that could be the case from regulator as well, that I can see that you are encouraging people to do the wrong thing. Okay, let's see that who are those clients that said yes to you and now they are doing tax evasion. Let's go through your client list and let's give them penalty one by one. And also the reputational damage, as you said, that if your name is on the Panama Papers, there are still websites that I can type in this, and your company name and your personal name might even come up today, which could be hindering future growth and opportunities in business. And finally, but not lastly, there is huge global consequences, because we are all here to, to do our fair bit to our economy, to our society. And yes, maybe you don't agree with what the government says and elections and whatnot, but there are rules and regulations for a reason. Your job is just as much as mine and everybody else in it is to maintain the trust in this financial system, right? So anything which is weakens this trust is damaging for your business, for my livelihood, for everyone. Um, if there are a lot of people who are avoiding taxes, the really tax abiding citizens need to face more and more paperwork because we need to filter out the bad actors. That means that there's going to be a tougher regulatory environment, which is increasing your cost, my cost, everybody's cost. The bank needs to make more and more checks because there are creative people who are avoiding the rules. There are going to be more compliance requirements. There's going to be obviously a raising cost, which is obviously going to be passed on to the clients, you and me, right? And the bank is not going to pay for it, for all these extra costs. And this overall fee increase means that we, as the good actors, will have a harder time for operation for our businesses, and we as individuals going to live in a worse economy and the worst conditions when everything is suspicious and everybody's trying to avoid the system. There's no trust in the system, and this is a global phenomenon, and this is a global issue. So of course, if you see anyone who is avoiding taxes or doing the wrong thing, you need to report them. Fair enough. But you shouldn't be also part of the problem. You should be part of the solution to maintain this financial system, to maintain this trust overall between countries, the trade. And this is fundamental to understand that everybody's efforts are needed in this to make sure that everybody's paying their fair bit of taxes and no crime is being committed. So what to do? Well, think again. If someone is offering you, hey, I know someone who can set you up an offshore company and a bank account with that, and don't you worry, there's going to be nominee directors. Think about it. Does it really worth it? What are the short-term benefits versus the long-term consequences? What are the risks that you are taking? Is it ethical? Do you feel okay about that? Is it going to be compliant? Do you have the substance, or you are just really balancing on a thin edge and everybody knows what you are doing? So eventually you will come down with this idea. You need to have sustainable strategies. You need to have a secure and stable strategy for your business, not necessarily just banking and payment perspective, which is obviously they are forcing you to do the right thing, but from your operation within to make sure that your business complies, not only because you have to, but because you want to. So you're getting the license for some activities. You are disclosing information to the bank, not just because you know that they will ask for it, but because you know that this is the right thing to do. And you don't want to be part of the problem. And you want to make sure that everything is done right for basically the society and the whole economy that we live in. But on the long term, you need to build a secure and stable systems which you can scale up later, which you can build on later. If the businesses start to earn millions, you will be able to expand more on that. And if there is any kind of investigation, you are confident that you are not doing the wrong thing. And this is what we are helping you with. This is what I mentioned at the beginning, that we developed an overall banking and payment strategy, which is the shortest payment framework, which is ideal for international group of companies dealing with multiple companies, nominee directors, international funds, multiple bank accounts. It it puts under scrutiny your taxes and the tax plans versus your banking and payment providers, because sometimes we are having clients who come from these dubious, questionable providers from social media advertising that you can cheat tax everywhere, and then they come to us and they say that, well, my tax advisor said that open up an offshore company there and offshore there and offshore there, and everything is legal. Yes, it might be legal. Yes, you might not actually doing tax evasion. You might not go to jail. But good luck to find a bank or a payment provider who wants to take the risk with you, or who wants to have the reputational damage to work with companies like you. And this is the key here, that you have to have a full holistic approach to payments and banking, and plan your operation around payments and banking instead of plan payments and banking around to fit your operation. Tables have turned. It's no longer the banks are doing you a favor. It's no longer your money is going to the bank and you're happy that, oh, my business, they should be happy to deal with me. No, it's now the banks are doing you the favor to take you as a client, to take an extra layer of risk with them, because as we said, that there's a huge burden on them, filter out that they are doing the right thing, risking their license, and also satisfying the shareholders. So when you have this setup, the other thing is very important, that you need to monitor, revise, and challenge this plan regularly, because your company is changing, your volumes are changing, you're going to new jurisdiction, your business is not as it was 5 years ago. I mean, if you're doing a good business, most probably you want to grow, right? So in 5 years, of course, you're going to change a lot. But the environment is changing, the regulation is changing, the political situation is changing. What is okay today might be wrong tomorrow. But then again, your banks are changing, the financial providers are changing, they are charging you different fees. There is a technological change. They are coming up with new payment methods, which is easier, better, quicker to integrate, easier to use, give better customer service, easier to, I don't know, pay with my watch, use my wallet, use my mobile instead of typing up the long, I don't know, 20-digit IBAN number just to send a bank transfer like we did 10 years ago. So you always need to understand that what is available for your business, what is the best you can get out of that, how you can incorporate that to your operation and build your operation towards the easiest cash flow and the best way of flowing funds through your company, because that is how you win today. It's no longer, I've got an operation, banks should be happy to deal with me. Have an operation which is satisfying the best payment provider with the best technology, with the best customer service, with the best compliance, with the best strategy. This is what you need, and this is what we advocate for. So in a summary, don't resist. You can resist, but you're gonna pull the shorter end of the story, because you have to comply to fit in the world instead of the world needs to cater for your needs. So don't come up with creative ways to outsmart the system, because maybe for a short time you can, but there are significant risks around that. Taxes must be paid. You have to have a clear activity. You have to have a clear setup and a clear payment flow, which is understandable and is the right thing to do. And if it's too complicated and too heavy, I understand you're not the first one and you're not the only one who is dealing with these problems. We are all in it together. So feel free to reach out to us. Visit shortestinstitute.com for more information here. Watch our free webinars, watch our videos, and get yourself educated on this subject, because this has to be discussed. These are very valid issues. And as I said, be part of the solution, don't be part of the problem. And of course, we are here. If you need anything, reach out to us. But this is basically a common effort, that how we can make the financial system scalable, trustable, robust, and sustainable for the future as well. So thank you very much for the attention. You see the availabilities here if you would like to reach out, and let's see if we have any kind of comments or questions from the audience. I would like to hear a bit more from you on this.
All right, thank you to our speaker for sharing their valuable insights today. So before we move into the Q&A session, I'd like to take a moment to highlight Adam FTD, a powerful platform developed by ICTTM. If you're interested to streamline your trade compliance processes and gaining deeper market intelligence, so Adam FTD offers an incredible suite of tools to help your business stay ahead in ever-changing global trade landscape. For more information or to get started, please feel free to approach us and we're happy to connect you with the right resources. So let's now open the floor for your questions. Please feel free to type in your question here in the Q&A box or in the chat box as well. I already have few questions, one question here.
Mhm.
So the question is, do all shell companies illegal? How local director nominee can do mistake? How much shell companies accepted by regulatory authorities in USA or Europe?
So, do like all shell companies are illegal? No, definitely not. The shell companies are only illegal when you cannot justify why do you have them. And when the bank is asking you, oh, why do you have a company there in the Bahamas, and you say to avoid taxes, this is not the right answer, right? So it is only illegal if it's obviously used for you to cheat taxes. Then it's illegal and you shouldn't do that. But you have a company set up in a certain jurisdiction for justifiable reasons, then it's fine. And it leads to the second question: how is local director, which is a nominee, can do mistakes? A lot of mistakes. Basically, you're putting your company in a hand of an administrator. Of course, that's their job, so chances are they're not going to go and empty your bank account and kill your operation. But if someone has full right to sign all the agreements and have full access to your bank accounts and make all the decisions, even though that they are nominee, their name as a director is on the papers, so they are the actual directors, and this is a risk. And as we mentioned, if that director is giving other directorship services to multiple other companies, one company is making a mistake of this lot, that director is going to be flagged as fraudulent. Now you have a fraudulent director. Deal with that on an international level. Everywhere it's going to come up that this company has a director which went down to fraud. Again, it's a serious risk that you also need to consider. You need to see that what's the benefit and what's the risk, but this is something that you at least need to know about.
Thank you. And another one from ITC. How do banks and payment providers identify compliance risks in offshore setups and shell companies?
Completely subjective, but there are certain common points that is recurring, so it's worth mentioning. First of all, who are you? They are doing the KYC. Where do you live? Give me a utility bill, give me your passport copy, maybe a CV. They are running you as a key, for example, shareholder or director of the company through different channels. If you're a terrorist or you have done any kind of illegal things or you're fraudulent or whatnot. But they're also doing the checks on the business. And it could be as deep as why do you have this fee for your services? Or is it even viable to sell those products for this much money? Because think about it. If a bank or a financial provider is onboarding you, it's a cost and the time and the headache and the risk. So they need to see if it's worth it. So if you are coming with something which is so unique and so innovative, the bank is going to say that, but I don't know if I'm putting effort, energy to onboard you and start business with you. Are you even going to worth it on the long term? So they need to evaluate everything. Are you selling things legally? Are you selling it to the right people? Are you moving money in jurisdictions that you should? For example, you're not dealing with sanctioned countries, right? You're not accepting payments from Iran. So those are the most important parts. But as we said, it could be very, very subjective because different regulators want different checklists. But overall, the business, the financial institution or a bank need to make sure that you are okay. You're not going to do tax avoidance or you're not doing anything illegal. And if they are okay with it and they can prove that they checked everything, that's usually the limit when they say that, okay, I can now trust you enough that I open my account for you and you can accept payments on my account. I'm risking penalty, you're risking penalty, but I think it's okay. But this could be very subjective.
Thank you. I don't see any more question here, but I'm getting feedback that this is a great presentation, excellent
Thank you.
presentation. So before we conclude the webinar, Victoria, any parting words to our audience or anything that you would like to add?
That's it. Obviously, guys, you need to think about from the banking perspective how you're running a business. As I mentioned, that think how banks and payment providers would like to see you and become that, and your life is going to be much easier. But if there is any question or doubt, as I said, you're not the only one. It is complex and it is complicated, and you will need help for sure. With or without us, but obviously we are here to help. So I would like to get your feedback, your ideas, your comments, your questions. So feel free to reach out to us and make this whole financial system a safer and a more stable one for everyone.
All right. Again, thank you for your insightful presentation, Victoria, and thank you to all our participants for joining us today. On behalf of the International Trade Council, we appreciate your time and engagement. We hope you found this session valuable and informative. Again, if you have any questions further, if you need additional resources, please don't hesitate to reach out to us. Thank you once again, and we look forward to seeing you to our future events. Thank you,
Thank you
Victoria.
very much, Ron. Thank you so much for all the great work that you are doing. It's
Thank
amazing
you.
and hope to see you soon. Thank you.
See you soon. Bye.